Hello, investors, and welcome to AI Insights U.S. Stocks. I'm your chief AI analyst. Just a quick reminder, this show is for educational purposes only and is not investment advice. Investing always involves risk, so please trade with caution. Today is November 28th, 2025, and in just a few minutes, we're going to break down everything that moved the markets. On the surface, it looked like a great day, but if you look closer, there's a serious split developing right under our noses.
All right, let's kick things off with the big picture. The market had a really strong showing in the shortened session after the holiday. Take a look at this chart. The Dow, the S&P 500, and the Nasdaq all closed in the green, wrapping up what was their best week since all the way back in June. I mean, we're talking about a nearly 4% jump for the S&P 500 alone. That definitely signals some serious bullish momentum. But that's not the whole story.
And this is where things get really interesting. Let's zoom out just a little bit, from the daily gains to the whole month of November. While today was a win, the Nasdaq actually snapped its incredible 7-month winning streak this month, falling almost 2%. But at the exact same time, the Dow and the S&P 500 just kept on climbing. So what on earth is driving this split personality in the market?
Well, to solve this little puzzle, we've got to pop the hood and look at the individual stocks, because that's where the real action is. And right now in the tech sector, it is a genuine tug-of-war, with some very clear winners and some very clear losers.
You can almost think of it like a high-stakes game of musical chairs. On one side, you have companies like Intel and SanDisk, who soared and definitely found a seat. But on the other side, you have heavyweights like Nvidia and Oracle, who are kind of left standing when the music stopped. The why behind all this is what really tells the story. So let's start with the star of the show today.
Yeah, that massive number belongs to Intel. The chipmaker absolutely surged, up over 10% today. That made it the top performer in the entire S&P 500. So what could possibly light that kind of fire under a legacy giant like Intel?
It all boils down to one powerful piece of speculation. An analyst report came out suggesting that Intel could become a foundry supplier for Apple. Basically, Intel would start manufacturing chips that Apple designs. Now, it's just a rumor for now, but the mere possibility of partnering up with Apple was enough to send the stock into the stratosphere. It just goes to show you, in this market, a good story can be just as powerful as hard numbers.
But of course, on the other side of that tug-of-war, not everyone was celebrating. The AI darlings that have pretty much been the engine of this year's rally, well, they hit a speed bump. Nvidia kept sliding because of concerns about competition, and Oracle cooled off too. And even outside of tech, we saw some profit-taking and huge winners like Eli Lilly, which pulled back a bit after its historic run. It kind of suggests we might be seeing a rotation out of the year's biggest winners.
So this brings us right back to our main question. If market leaders like Nvidia are falling, what is giving the broader market enough confidence to post its best week in months? Well, the answer, as it so often does, has to do with the Federal Reserve. The real fuel for this rally is what the market thinks the Fed is going to do next. According to Brian Mulberry over at Zacks Investment Management, traders are now pricing in an 80 to 85% chance of a rate cut in December. That is a really powerful expectation. When the market thinks cheaper money is on the way, it gets a risk-on appetite, and that pushes investors into stocks.
And you've got to remember, this isn't just a one-off hope. A rate cut in December would actually be the third one in a row, right after the cuts in September and October. This creates a really clear easing trend, which basically tells the market that the Fed is in support mode as we head into the new year.
Okay, so let's move on and look at the broader economic picture here. Because beyond just the Fed, there are some other positive signals out there that are helping to support all this optimism. And the first big signal is coming directly from you, the consumer. According to Adobe Analytics, holiday shopping is off to a blockbuster start. Thanksgiving Day alone saw a record $6.4 billion in online spending. That's a jump of more than 5% from last year. And it looks like deep discounts, especially on electronics and toys, were the secret sauce to get shoppers clicking that buy button.
And this good mood isn't just for the big cap names either. We're seeing strength broaden out across the market. Small cap stocks, which you can track with the Russell 2000, actually did better than the major indices in November. Silver is on an absolute tear, hitting a record high with a staggering 90% gain this year. And even airlines are catching a tailwind from all the holiday travel and lower fuel costs. This is the kind of broad strength that suggests a healthier rally.
So, quick takeaway. The market is finishing the week feeling very optimistic, mostly because everyone expects the Fed to keep cutting interest rates. But that optimism is hiding some real turbulence among the very tech stocks that have led the market all year.
So that leaves us with the billion-dollar question as we head into the final month of the year. Is the Fed's expected gift of cheaper money going to be enough to lift all boats? Or is the trouble we're seeing in tech a sign of rough seas ahead? Let me know what you think. Drop your thoughts in the comments. See you in the next episode.